G'day everyone, welcome back to Pete's Investing. Here we're looking at the weekly index and gold updates, and hopefully the downtrend has ended for our respective charts that we're looking at. But first, don't forget, we're not recommending you trade these. It's simply an educational series of videos, and if you want to look at our historic reviews on our weekly reviews, our indexes are held in this playlist. Our share price reviews are held in this playlist, and our strategies that we're following are in this playlist here. So if you look further into the strategies, we're looking at simple trading strategies, the average down process, and some money management ideas. Also, just going to add into this week's video and upcoming videos how to understand the charts and what they represent. Feel free to pause the video and digest this and the next slide, which helps you explain some of the reasons for the chart. So the top chart is basically our profitability in the currency of the index. So it could be US dollars, Australian dollars, or in euro, for example. The second chart represents the number of contracts that have been opened. The third chart represents the price chart in 15-minute time frame. The fourth chart is the approximate exit price of our strategy, and again refer to the simple trading strategies to get a better explanation. But very simply, we look at the last 100 bars, the 15-minute bars, and it calculates the average high-low range of those 100 bars. And for example, if the high-low range is 25 points, then we need to hit at least 25 points before we exit once our CCI indicator turns into the negative. The fifth chart represents the commodity channel index, or the CCI 100. We're tracking that at the moving average of 20. So the open trade is when the CCI moving average breaks above zero, and we close a trade when it breaks below zero, and the minimum range above has been reached. The last chart is simply a pictorial of this CCI indicator, and the spikes indicate entry and exit points. So, and that's what I've done here, just in this pictorial, showing the profitability chart up here, the number of contracts being traded, our price chart, 15-minute price chart, the high-low range, our CCI indicator, and the spikes indicate where those CCI indicators may be entered, just to help clarify some of this noise here. So let's get stuck straight into it. So we're looking here at the ASX first for the Australian market. So we're looking at this week's trading here. It's entered in positive territory, and it's breaking through our key resistance up here. So that's a good sign. It's broken through our first resistance, and it's now hit our second resistance. So that's a good sign, and hopefully we continue in an uptrend. If the CCI does break below the zero, and it's above our minimum range, then the positions will close out at a profit. As you can see here, we entered the position back here with a profitability of 4,763, and our current profit sitting at 5,800. So that's looking good so far. So long as there's not a big spike down, then we should be in a nice profitable range of that. Next, we look at the US market. This is another profitable trade so far. It's broken above that first resistance line, and it's actually broken out of this resistance here from the last couple of weeks. So that's a good sign as well. Will it continue the uptrend similar to the ASX? We'll see in the coming week. The German market. Again, you can see here from the previous couple of weeks, it was trading sideways. Then it's broken above that key resistance area there. So again, it's looking positive so far, and it's looking like it's breaking above our profitability, and that should probably close out soon, assuming the CCI continues this little downtrend and breaks below the zero line. The Ftse. This is a bit different. It's trading on a break-even level. So if you look back here where we entered the trade, the profitability there was 69.15, and we're currently sitting at 70.33. So it's just above our break-even point, but it needs to break above this resistance, and then the next level will be above this resistance area up here to show us any profitability. If the CCI breaks below our zero here, because we haven't hit our minimum target of high-low range, then it won't close out. It'll just continue trading. Again, refer to our strategy videos for a better explanation or more detailed explanation of that. Let's look at the China market. You can see here the last few weeks has been in a bit of a downtrend. Now it's probably breaking that downtrend. Now it hasn't broken into a positive territory in terms of profitability yet. You can see here it entered the market back here. It's been for about 1, 2, 3, 4, 5 weeks. It's in a bit of a downtrend. Here it's sort of moving in a slightly upward trend, but it needs to break well above that to hit more positive territory, and that probably ideally break above that resistance level there. So will it begin a new uptrend? We'll wait and see in the coming weeks. Lastly, gold. And it's potentially broken the resistance level. You can see there in the last couple of weeks is going sideways, bit of a downtrend there. It's bounced off this key support area here, middle of the week, from our midweek update, and it's broken up above these resistance lines. Let's see if it continues up towards this resistance level, and you can see there it's coming close to our break-even baseline of 100,000. But we entered the trade back here with a profitability of 833, so we need to go back into that territory. We entered into multiple contracts at those 2 points there, so we entered 5 more contracts there and another 5 there at that level. That's it. And don't forget to hit the subscribe and like button and notification bell to get more updates, and occasionally if anything major happens during the week, we'll provide a midweek update. That's it for the indexes and gold this week. I'll speak to you guys next week.